Welcome to Insights. I'm Eric. Thanks for joining us again. We're going to talk about gold one more time. I had a great question whether or not it's time to buy gold yet, and it probably came with a little bit of laughter, but I'm sure there was some seriousness behind that as people have been waiting for gold to get off of its ass and do something. But I said a long time ago, as far back as it probably was even April, May, somewhere in that time frame, that gold was going to enter a frustration phase, and that frustration phase was due to a large blocking dome that's been sitting over gold like an anvil that's fallen on top of Wile E. Coyote. Always, if anybody watches the old school cartoons, that's probably the best image. It has to get rid of itself. Either you have to get out of its way, or you have to get flattened by it. But what we're talking about here in terms of that anvil is really is energy. And energy has been in a bearish state. It's been below zero. It's been below minus 60 for many weeks, for many months. And you can see that for these numbers right here, and we look down from gold to platinum to silver, this is the first time we're close to even 60. I mean, this is significant. This is really quite significant. And we're going to take a look at that in a second. In terms of the daily trend, and now the downturn in silver is getting quite extended. So anybody who's piling in onto the bear side in silvers has no idea what's going on in the daily trend. This is the price cycle. This is the time cycle. They're both above 2. So anyone entering here doesn't understand cycles whatsoever. And I know that happens. I mean, count me in. A long time ago, I was there. It's easy to chase, but this is why we have the matrix, is why we ask the computer to identify these cycles so we don't do stupid things, because it's us that's the biggest enemy. So in terms of the gold sector, here's gold itself all the way down to silver. The primary trends are up for everything but gold. Gold's a flip in progress downward, but we're starting to get a bullish energy build. And when you take a look at both gold and silver, and to some extent platinum, and you transfer that over and say, hey, what's the precious metals gold DI doing? The gold DI is 50 and it's minus 17. I think we've talked about this once before, but this reminds me an awful lot about 2010, when you finally saw an upward spike, a massive energy build that held over the blocking domes, several blocking domes, 1, 2, 3 of them. It kept price from accelerating, and then finally it released and it generated two quick light bullish cups, and then price took off in towards the end of 2011. Now this one's going to be different than that time period, but we've been long waiting for the same energy build that's been blocking. These blocking domes have been here. There's been one right there. And all of a sudden now we finally have an energy release. We have a release of that. DI is almost 60, and it's and DI2 probably within a couple weeks going to be above the 0 mark. This could be the high water mark. I do suspect we could go a little bit higher as the price of gold backs and fills against possibly a strengthening US dollar rally. But at some point in time, gold and the dollar could rally together as confidence deteriorates. And we're going to look at that in just a second too, because confidence took a major shift on Friday. And whether it be the removal of the stimulus checks or the implied guarantee of unemployment benefits, or it's just that the invisible hand understands that the system is faltering and people are losing confidence in it, it took a steep decline on Friday. And you can see that here. If we take a quick look and zoom in, we can see that we were in a counter trend rally, and then we broke hard, and now we've broken below the previous low. Now it could be revised upward to some extent by the end of the month, but this is a fairly deep drop. If we look at that in terms of the confidence oscillator, which is found in line 103 of the matrix in the trends tab, we were still below the red. We still have a red box. We're still below the 0 line, which is the dotted line here, which maintains the bear phase. The record long bull phase is going to be followed by a record long bear phase. And what does that mean? Well, if you look at either a full continuous series of the red box, or short breaks of them, and connect them together, you can see in general confidence bear phases generate substantial rallies in the price of gold. We've seen two majors, and then we've seen a minor one, but this kind of held the price of gold in a checking action, as in general this was just an offset between a very large bull phase, which sent the price of gold down from 1982 to about 2000. but we are coming off of a large bull phase in confidence, which the price of gold actually didn't do too bad, didn't crash, didn't crater. It hung in there, and now we've entered a bear phase. Now, most people don't recognize the bear phase, and it's my condolences to them for not knowing that, but things are going to get worse. In terms of confidence, what is confidence? It's spending, it's retail spending, it's confidence in your leadership, it's your government, your institutions. When this is in a bear phase, a lot of things get questioned. And when things get questioned, things don't function so well. They don't function very well in the periphery economies, which includes everything but the US dollar. Money will head back to the core. It'll look for a place to park. Some of that could be the US dollar, it could be the bond market for a while until they go after it. And ultimately, some of that's going to diversify into the gold market. As you see, the bear phases send powerful rallies in the gold market. So let's be clear about that. We've entered a bear phase. I've talked about that. We're still in it. If you want to think that gold's heading down to zero because someone on a website said so, I would throw that in the garbage can and not go to that website again because they have no idea where confidence lies. This is one measure. I can show you other ones, but we'll talk about those later when I do a confidence review. I want to stick to the gold, the action in the gold market itself. So this is a significant. Is it time to buy gold? Well, the backdrop for gold is bullish. Now we trade according to and invest according to the evolution of the trade. Anybody who's been following this, go here, click this link, have it tattooed on your arm, write it on your desk is probably better than doing that because nobody wants to see the four phases of the evolution of the trade on someone's arm. I would write it down on the desk and study them each time, and every time we have a conversation, we can know where we stand. Right here, this is primary trend decline 1, which means that we're in the fourth phase. It tells us that palladium has been up a heck of a long time at 37 months, and you'd probably want to stay out of it or look for a reason to sell. We're going to hit primary trend decline 2 pretty soon because this number right here is going to go above 1. Palladium could still go up higher, but the easy money has probably been made. Eventually, at some point, if this reaches 2 standard deviations, then everyone who's been in palladium since 2018, which includes me right here, is going to liquidate their entire position. But at this point, if this thing resets or does anything, you pretty much ignore it, only holding your core position. But these other assets aren't anywhere close to where palladium is. Platinum, silver, and gold are relatively young and fresh. Here's their price cycles. Well, gold is still down. I mean, it needs to flip back up. And when it flips back up, it's going to be real early, which means there's going to be a lot of room for price and time to run. And that's what we're going to catch on. And there's only the extension that we're seeing is in the short term on the downside. But if these trends organize and they flip up, and we're talking about how does a trend organize? It goes daily, weekly, and monthly, go up or down together in unison. If they organize and there's a complementary energy build, bullish energy builds in platinum, there's a pretty significant energy build in silver, there's a growing energy build, and these are all bullish in gold. If they organize with these types or even higher numbers, there's enough energy here to start a new impulse, an impulse that will carry this up for multiple months. Now, these have been up. Silver's been up for 15 months. It's beyond it's mean, but it's not significant. It won't turn primary trend 1 until it gets to 0.5, and it won't be a real problem until it gets above 1, and it won't be an outright sell until it gets above 2. Now, we don't know if it's going to do any of that, but I suspect that silver hasn't come down because silver is the one that's going to lead everything higher. It's probably going to lead gold up. But in terms of is it time to buy this? Well, first we need to flip the primary trend for gold. This needs to go over here. It needs to be 1, then it needs to go to 2. This will be highlighted green, and then everyone can monkey pile on. Probably what will happen is the energy build will have dissipated as it does some of that. But considering it was set up by a bullish energy build, it will have some energy there in order to power the rally, and then it'll be fresh in terms of the price and time cycles. Platinum will be the same way. It's a little further advanced, but platinum is not even above its cycle mean here. It's still below 0, still below in price. Platinum is going to go too. I think silver is going to lead the way. Platinum is going to follow, and it's probably going to pull up the price of gold because confidence is really going to get shaken. And when confidence gets shaken, then you have inflation. I know everyone's convinced it's monetary printing that causes inflation, but it is really a confidence-born phenomenon. when people lose confidence in that, they look for alternatives and they don't want to get stuck in the what we call it, the tools of the institutions that they're losing confidence in, and they look for transitory mediums in order to find and hide away or hide under a pile of coats for long enough in order for the new system to organize itself, and then they will commit to that. It's these metals are transitory mediums until the new system gets formed. So what is it time to buy gold? Well, gold, silver for sure. You've already bought in it. We didn't even come out. We've been in it for 15 months. Is it time? It will be time when this goes into a primary trend and it flips. It's going to have to be a two. So gold is probably at least 2 months away still before it does that. If we're successful when we get this flip, gold might be ready by September, but gold's going to have to hustle up and do that. So we're going to follow the evolution of the trade. We'll help you out when it comes to that. We'll let everyone know. We're going to follow this energy build as time goes on, and we're going to know more about that after today. And we're going to find out if whether or not the invisible hand is even accumulating more. It probably didn't because the price of gold rallied sharply on Friday. But if it didn't, if the DIs rise when that happens, that's extremely bullish. If it goes a little bit flat, that's still pretty bullish. If it comes down a lot, then there might be some backing and fill, and that's yet to come. So hang in there. Don't lose faith. Well, it's not even faith. Don't do anything. Just follow the invisible hand. This has nothing to do with opinion. This is all about discipline. You shouldn't be heavily committed to gold until it's ready. We should still all be in silver. We should be in platinum. You should be in palladium. Until these numbers flip back down or the primary trends get red and old. Right now, they're not old enough, so you're in all three of them. So it's just that it's not easy because all three time frames are not aligned. So you need to have all three time frames aligned in order to have acceleration. The internet talks about acceleration both to the up and down. They don't give a crap about the primary trend because it's too slow, and they don't even totally care about the weekly trend. The internet is focused on the short term. That's why the conversations and all the prognosticators and gurus come out when we have acceleration, because it's easy. But if you wait for acceleration, you're just chasing and you've already missed all the move. So the whole point of this stuff is to find the energy builds before they go, anticipate if you can by buying into a nibble. If you need to. But in this case, you could buy gold into a nibble, but the primary trend's not even old, so you can't even go by that rule. You have to wait for the primary trend to flip, and then you establish your core position because you'll know it's been set up by a decent energy build. So you just have to wait for the rules to fall out, and then after that, it makes it seem like, oh, he's extremely opinionated about gold. No, we're just following the evolution of the trade. You do that, you're not going to win any friends. You probably won't be wearing a tinfoil hat with everyone, and you probably won't get published much on the internet because that's what doesn't generate any clicks, but it's going to produce results. If you can see, there's 37 winners and 3 losers inside the matrix. The average gain of the 37 winners is 42% or 50%. The average of everything is 42%, which means you only have a few losses down here. The top 5 are making 180%. I mean, that's because you're just following the primary trend and using the power of time. Gold will be ready when the primary trend flips, and hopefully the energy build will be really big. We'll talk more about that, but just wanted to answer that question and hope everyone else feels a little bit more comfortable, not about their opinions of gold. Gold is whatever the invisible hand is doing. We don't really care. When it's time, we're going to be in it, and we're going to be out of it because we're not going to care when it's time to be out of it because we don't care about what's in the matrix. They're not our best friends. We're just tracking things, and we're moving through and understanding what the invisible hand. The invisible hand buys and sells without any regard to emotion. That's why it's successful. So we learn to track it and don't care about the fundamentals because we leave that to the invisible hand. The invisible hand knows more than any guru out there. So I don't even try and figure out and give an explanation of what it's trying to say because you're wasting your time. I know that makes a lot of enemies, but that is it's just far more efficient that way. So I want to thank everyone sending in their questions. If you got any more, this one's about gold, or if you want to talk about that, let me know. It's always good to hear everyone's opinions or ideas or even questions about how the matrix runs. Again, it keeps everyone sharp, and it probably keeps up the discussion, and that's what everyone needs in order to make it to the next level. You don't follow the invisible hand because it talks to you. You have to be good at interpreting it. So if you have any questions, contact me back at the blog. If not, enjoy the rest of your day.